Let's take a 15 seconds break and ask ourselves, how confident are we while investing in stocks? Nope, so many blurry visions. The reason could be the lack of knowledge to fundamentally analyze the stocks and decide whether to buy it or not, or whether this is the right time to buy it or not. Let me ask you another question. How often do you rely on the tips from banks, news, or from your friends to actually buy the stocks? And how good are those tips working out for you? There are a total of 11 crore retail investors in India, and a lot of them are floating around their money without actually analyzing the stocks, just relying on the tips, and actually losing quite a lot to the experts. And don't worry, we got you covered here. Namaste, myself Shiv, and I will be a learning buddy in this course called Fundamental Analysis of Companies #Demystifying Stock Jargon. When I started my journey in finance a couple of years ago, I remember I couldn't find a full-length credible course on this topic for free. The courses were there in bits and pieces, but they were barely touching the surface of the technicality that we need to understand while investing a huge amount of our income in the stocks. Let me tell you, during the COVID era, the number of retail investors have increased significantly. And now, it is actually the responsibility for us to create high-quality financial literacy. And that is our motive why we are here today. The reason we are providing this course for free of cost is because we want to give something back to the society. Like personally, you have already paid me. I got to study in government college, I got scholarship, and all has been paid with the help of taxpayers' money. And now it's a small contribution to give back something what I have taken, and more in the future to come. The target audience for this course is going to be anyone who wants to get the confidence in investing, the same confidence which one gets while driving a car, or maybe cooking, or maybe at something which someone is very good at. Whether you are a high school student, a graduate, an employee, or a businessman, it doesn't matter whether you are investing from a long time or a new investor. If you really want to understand the technicality of analyzing the companies in detail, to the point, without any worldly jargon, and in the simplest way possible, this course is for you. So here's the outline of the 4 sections in this course which we are going to cover. The first section is going to be the company analysis. The second section, management analysis. The third section is going to be industry analysis. And the fourth section is going to be economy analysis. All these sections are equally important to judge how a company is doing or going to do in the future, and whether investing in that company would be a well-balanced risk or not. In the section 1, company analysis, let's list down all the things that we are going to learn. Exciteful? Yeah. So the first thing is profit and loss, which we call as an income statement. So this statement basically lists down all the incomes that the company had in the current financial year. So the profit and loss statement is for each financial years. And this basically lists down the revenues, the taxes, the interest, the net profit that the company has. So using this statement, you can actually find out whether the company is doing good or not, how much revenue it is generating, how much is its operating profit, and all these things which we are going to cover later in the detail. Second is assets and liabilities. We call this as a balance sheet. And how this differs from profit and loss statement is that this is from the starting of the business. Since the business has been incorporated, this sheet contains all the assets, its liabilities, its current liabilities. Now what is current and what is non-current liabilities we are going to study later. So just remember that balance sheets list down all the assets that a company has and all the liabilities. Now asset is something which the company owns, and liabilities is something which the company owe, which basically they have to give back. Next we are going to learn the cash flow. Now if you know, none of the business can survive without the cash, and this is a very important parameter to judge whether the company has enough cash or not. In this we are going to learn the operating cash flow, the investing cash flow, financial cash flow, the free cash flows, and all these things we'll be discussing later. The fourth, we are going to learn the financial ratios, and here you will see actually the beautifulness of mathematics, how easily we are going to see that the profit, loss, and the assets liability columns are demystified using the ratios. I mean, just simple ratios. Even a grade 5 student will know how to do a ratio. And even you don't have to do the ratio, you will get all the calculations there. They are available. We'll show you how to get them. And these are very wonderful. They are very imaginary, that how you can just by looking at the ratios, you can judge whether the company will go bankrupt or not, whether the company is making profits or not, or whether the company has improved their profit margin or not, and a lot of other things. So yeah. The next, we are going to see whether the promoters, foreign investors, domestic investors like mutual funds have increased or decreased their shares. Now, as you might have got the hint, if the promoters are basically the owners of the company, if they are basically buying the shares, that means they are trusting them, or they have some insider information that they know the price are going to increase. So these kinds of information tells us a very, very gritty picture of how good the company is. The next, we are going to see the block deals. Now, the block deals are basically the deals which are done in blocks, like suppose any big shark investor. All the block deals we can see, and if one of the persons, say ICICI Securities or HDFC Bank, is buying in block or is selling in block, that would basically means there is something happening. And this is a very crucial information. I mean, this is something you have to analyze. The next is future and option status. Now, what is future and option is not going to cover in this course, but what is the status of future and options? How are the people putting the future growth of the company, whether they are putting the price up or low? Future and option status checking can actually help us know whether the price in the short term is going to increase or decrease. And next are the products. And I mean, if you are analyzing a company and you don't know what products it makes, and basically what all products contribute to what all percentage of its revenue. I mean, I know you might have invested in a lot of companies, and tell me truthfully, do you even know the product it makes and what is the percentage of revenue it gets from each of the products? Now, why it becomes important, you will get to know when we analyze it. Suppose there is a supply chain issue and you know that this is the major product which generates the major revenue. And if that product is getting impacted, you know that the company sales is going to go down dramatically. Now, the next is peer comparison. Here we are going to analyze the peers, the competitors, how well are they doing, what profit margin the peer has, and what the company you are investing has. The next, we are going to learn the valuation models. The valuation models basically tell you what is the actual value. I mean, you might see there are a lot of companies whose share prices are pretty high. When I say pretty high, I mean pretty high in valuation. And their intrinsic value. Intrinsic value means their actual values are pretty low. And what is the method to calculate those? We are going to learn here. By the way, don't worry. There might be a lot of technical terms which you might not understand if you are very, very new. And we are going to cover each of them in detail. So don't worry. This is just the outline of the section 1. The next, we are going to understand the credit rating. There are companies like CRISIL and a lot of like Moody's who actually gives rating to the companies. They basically rate the bonds. And what are bonds we're going to understand. And basically if the ratings of the companies are bad, that means there is something wrong. And we have to analyze that too. The next is auditor's report. An auditor is someone who basically finds out whether the financial reports are being written correctly or not. And if auditor says, which is rare, but if you find it says that he found some issue, and that's basically a very, very big red flag. The next is the legal cases. You have to understand what all are the legal cases. Like you might have seen the future retail, which was actually Reliance was going to buy, and then Amazon filed a lawsuit. And because of the lawsuit, the whole deal got cracked down and future retail almost crashed like indefinitely. And if that legal case wouldn't have happened, future retail would still be there doing good, maybe doing good. So legal cases are important. And then the risk management. And if you say, suppose you take an example of Tata Chemicals, you see that maybe the supply of some of the ingredients could actually cause the risk, and you have to learn what are those risks, so that in future if you hear the news that these ingredients are getting in short, you know that your company is going to affect. And you also have to understand how is the management doing the risk management. Basically, what all steps are they taking? Are they looking for an alternate vendors? We will be discussing all these things in very more details. This is just an outline of section 1. Now in the section 2, we are going to understand the management analysis. And in the management analysis, we are going to understand the qualification and background of the key management persons like CEOs, CFOs, CTOs. And then we are going to understand the pay scale and the perks. Basically, we have to compare whether the pay scale is as per the industry benchmark, or if it's too high, is there a reason whether that person is really amazing? That's why he's getting so much paid, or whether the books are getting cooked up. The third is the related party transactions, which would basically means if the key managerial persons is getting benefited indirectly, say from an affiliate or from a subsidiary of the parent company. Fourth, we have to analyze if there is any fraud case against the management. But it is also possible that there are multiple fraud cases against the management, and then in such case, we have to stay away from such companies. And the fifth is if there is any legal case. So there could be legal cases against the management, but there shouldn't be any fraud cases. Now the section third deals with the industry analysis. In the industry analysis, first we are going to understand the sectoral growth. Now if you remember during the COVID time, the automobile sector was deeply impacted because of the chip shortage. And if you know this sector is impacted right now, I don't think it would be wise to invest in that sector unless and until the prices have dropped, and it's a good opportunity which we are going to learn. Second is a product segmentation. We want to understand what all is the product segmentation looks like for automobiles, what all is the segmentation, like the tires, the brakes, the materials, and all these stuff we wanted to see. And then we want to take the subset of those and see what our company is making. The third are the key players. This is similar to what we have done in the company analysis, but the aspect is going to be different. The mindset is going to be different. We wanted to understand how the key players are doing. The fourth is import versus export. We really wanted to see if there is any trade deficit, if there is any good opportunity that the company have in this country. The fifth is the demand. We want to see if the demand is going up or going down. The sixth is the competitive advantage. We really wanted to see if the company has any patents or any state-of-the-art facility which gives it an edge over its competitor. Seventh is the key growth drivers. We want to understand what is the key growth drivers. Like, is there any government policy? Like for electric vehicles, the government gave a lot of subsidies, not only to the factories, but also to the buyers. So those are something which we call as key growth drivers, and we have to understand what all they are. The next are the key suppliers. Now, the reason we want to understand the key suppliers is because we want to understand if the suppliers are within the country or outside of the country, and if any issue in the supply chain is going to affect it. So we want to know who are the key suppliers. The next is the distribution method. This is again a link to the key suppliers. We want to basically know how does the supply chain looks like, how many products, how many raw materials, and how many companies are established in what all places. The 10th is the government's promotion or restriction. We want to see if the government is restricting anything, like you say there is a liquor ban in Bihar, and that might have a very big impact on the liquor or the beer industry. So we really have to understand how is the government's overview and the government's policies for that particular industry. In the last section, we are going to discuss the economy analysis, and trust me, this section is equally important. In this section, we are going to analyze the gross value added, the gross domestic product, the current account deficit, and you really don't have to worry about all these stock jargon words. We are going to cover them in detail. Fourth, the fiscal policies, the budgets. Fifth, inflation rate, and you will be really surprised how inflation rate affects the overall economy, the bank FDs, the RBI repo rate. The sixth, we are going to understand the consumer price index. Seventh, we are going to understand the country's debt. Eighth, foreign direct investment. Basically, we want to see if we are getting investment from foreign or not. And as you know, if these kind of investment decrease, you really see the employment rate decreases, because these are the main investments for our startups. And in the ninth, we are going to see the forex rate, the one you see whether the rupee is 82 or it is 80, it is falling or it is rising. By the way, that 82 or 80 is not actually good because the purchase power parity has not been taken into account. So when you say the rupee is falling or it's increasing, you really are doing it wrongly, because you have to take into account the purchase power parity. And then you would figure out that rupee might actually be doing well than it is projected. We will discuss that. The 10th is going to be the employment rate. And the 11th is going to be the political stability. It would be difficult to judge the political stability, but still we'll try to get a good idea of how the political stability is going on. So this is the overall outline of this course. As you might have figured it out, this course is going to be pretty deep. We're going to dive in and bring out all the technicalities so that you really get confident while investing and you really just don't rely on any tips. And basically we'll try to create a whole ecosystem by combining all these 4 sections. And next, I will be giving you a small highlight of what strategy we are going to adopt, so that, I mean, combining all these could be difficult if you just do it one by one, or if you take any random method. So we have created a strategy. We will be combining all these and get a score, and we analyze our companies using that score. So let's go and see how it looks like. So this is the small highlight table of how we are going to strategize our findings. And this is not a full table. The table might go to 4 to 5 pages, and you really don't have to worry, because all the data that we need would be readily available, and you really will not need a lot of time to analyze it. So basically we will be taking several parameters. Just don't look at the names. It might confuse you. We are going to learn them, and then we are going to rate them from 0 to 1. We are keeping here the binary rating, because we really don't want you to get confused to rate it from 0 to 10 and then decide whether it should be 5 or 6. So it is either going to be 0 or 1, nothing else. So before we finish off with our lecture 1, I wanted to ask you, what type of investor are you? Let me give you some examples of the types of investor. The first is a value investor. These types of investor basically try to find out companies which are trading at their bargain price. Basically the companies which are cheaper than what it should be on the market. And these are called value investors. The second is a growth investor. These kind of companies basically look at the growth rate and how fast a company is growing. Maybe that company might be trading at a very premium price, very high price than it should be, but still they want to invest because the growth is higher. The third is a passive investor. A passive investor could be a person who really couldn't get much time, or they basically are scared because they couldn't directly invest in the stocks. So they basically go out with the mutual funds and invest there in the SIPs, which is not a bad thing. It's a pretty cool thing to do at the starting. The fourth is a momentum investor, which basically rises and rides on the stocks. What it basically means is when the stocks goes down, they try to buy it, and when the stock goes up, they basically try to sell it before it goes down again. And that's where most of the people couldn't do it. They couldn't sell it before it goes down again. And the last is the smartest one, the index investor. And the reason being, they basically invest directly on the index, like an index for an automobile company, which represents the entire automobile companies. Similarly, we have Nifty 50, we have Bank Nifty. So they basically directly invest just in the index funds, and that's all. So what, me? I'm a mixed kind of investor. Sometimes I'm a value investor, sometimes a passive, sometimes an index. But trust me, I never do the momentum thing. I don't really do ride on the trades of the stock market. I don't do speculations. I like to be fundamentally strong. And even if the shares goes down, I really don't care, because I know the company is fundamentally strong to bounce back in a while. So that's all for lecture 1. And thank you everyone for making my journey wonderful. And if you all do like the table of contents, and if you really wanted to understand how to do fundamental analysis of companies, do stick with us, where we'll be learning all these topics in detail. And see you in the next lecture. Thank you.